Hello, friends. Welcome to the Weekend Investing Daily Bite of 10th of January. And what a start of this year it has been. Market is relentlessly going down, not wanting to stop at any point. And today, with the first hour drop was met with a very fierce bounce back. In the second hour, one was hoping that today's fall will get arrested, but that didn't happen. Markets continue to fall, and it seems like that the bottom is still elusive. Uh, we are starting a new series, Momentum Misfits, from this Sunday onwards. So please watch this series. This is about momentum score and how stocks that have lost momentum should not be a part of your portfolio. Today's discussion will be about the skew problem. What is the skew problem? You'll need to see the second half of the video for this and how your portfolio may be getting impacted by the skew problem. Always do read the disclaimer fully. This is for your own good, and for your own good, please subscribe to the channel as well. Where is the market headed? The market for the third day in a row, and almost you can say out of the last six sessions, just one session was a pause. Otherwise, we had five red sessions in the last six sessions. Market has become oversold. Market is down 0.4% today, but it has not yet broken down from its previous lows. That is the only saving grace we can think about as of yet. Although other parts of the market have broken this, the November lows on those charts, and I'll show you that. So markets are in complete, uh, you know, you can say a bearish grip. Bulls not able to pull it out of this grip. Um, we've been into this situation now for about 4 months. Um, Usually, you will get a very nice bounce in any 6 month period in the market. We did get one minor bounce, I would say, but not of the kind that one would have expected. But we may be closer now to a bounce, as I think the either the budget outcome, which is 20 days away, or the Trump inauguration, which is 10 days away, or more results that come through. I think some of these effects put together is likely to cause some kind of panic bottom, and that may be the bottom for now. That is something that I would look forward to, but I don't think now that we are too far from a bounce. That is my personal gut feel. Gifty Junior continued to go down, so we are down another 2% today. Absolutely smashed down in the last six sessions. From nearly a high of 78,000, we are down to 64,000, which is nearly, I think, 17 or 18%, and that is getting quite deep. In terms of mid caps, a big day down. The gap that we were talking about yesterday has been filled and has gone further down. So mid caps also in a free fall, 2% down on mid caps, and small caps also filling the gap and going down at 2.44%. So no relief anywhere in all these spaces. Bank Nifty also down 1.55%. So Bank Nifty has collapsed from 54,000 recently and near 55,000 earlier to 48,000. So here again, we've seen about a 14% kind of a fall. And we are probably getting close to some oversold territories on some of these indices. Momentum distribution is completely towards the red, 430 declines to 70 advances. So nothing to see there. In the heat map of Nifty, there is only one green spot, and that is IT stocks, 5.6% on TCS on a day where it was announced that TCS results were the worst in the last 9 years, and the stock jumped 5.6%. HCL Tech, Infosys, Wipro, Tech Mahindra, all up. So IT stocks still working very hard to save the day, but not good enough because everything else was down, whether it was cement, autos, banks, energy stocks, FMCG, pharma, utilities. Nothing was spared. Hindustan Levers, Nestle, Britannia, I would still say, being flat for a weak part of the market is still quite good in that sense. Adani Enterprise, Bharat Electronics, etc., all moving down. Nifty Next 50 is awash with reds. This is a bloody red on this particular index. LTIM is green, and we also have, I don't know which stock is that, 2% up on another stock, but almost everything else is deep red. DMart, HAL, Adani stocks, DLF, Geofinance, REC 6%, Bajaj Holding, PFC, IRFC, Union Bank, Bosch, BHEL, everything down, down, down. Sectoral trends: real estate smashed down 2.8%, PSUs smashed down 2.7%, public sector enterprise smashed down 2.4%, pharma 2.1%. Pharma is a surprise. Normally, pharma remains a defensive sector when markets fall, but this time, because it has done so well, I think profit booking is happening. It is Pharma is still the best performing last 12-month stock sector in 28.6%. IT, on the other hand, gaining 3.4% and is also up 28% for the last 12 months. Autos is the third one, which is 24% up for the year, but today it was down 1.2%. So no place to hide today. Well, last 1 week also only IT was up, and last 1 month also virtually everything down, and 3 months also virtually everything down except IT. So losing ground on every sector is always not such a great feeling to be in the market at. IT stocks up 3.4%. You can see TCS, LTI, Tech Mahindra, HCL Tech all doing quite well today. And essentially, the US markets being very, very strong. The TCS numbers may be signaling that this is some sort of a short term bottom for IT stocks, and that is why the sector was running very, very hard. Let's now come to the skew problem. What is the skew problem? Let's take a look at that. So let's take a very simple example of index investing. Let's say buying the index is a great starting point for beginners. It helps you form the habit of investing. So if you're investing a little bit of amount in a Nifty ETF or a Nifty mutual fund, it helps you understand the market ecosystem. It helps you start getting used to the transactions. What is a demat account? How your index units will be treated, so on and so forth. And you're investing, let's say, 100 rupees in Nifty 50 every month. Now, where is that 100 rupees going is something that you want to know, right? So, I mean, it's going in Nifty for sure, but within Nifty, how is it getting distributed? So, 40 rupees are getting distributed in five stocks, then another 18 rupees in another four stocks, another 11 rupees goes for another four stocks, another 8 rupees goes in another four stocks, and so on and so forth. And there are some stocks which get very, very less money. So the 46 to 50th stock, these four stocks get only total of 2 rupees. So that's the distribution is skewed. Skewed mean not being normal distribution, but a skewed distribution. Some stocks get more amount of your money allocated to them. Now, 70% of the money goes into 30% of the stock. So let's say HDFC Bank. HDFC Bank is 12% of Nifty. So obviously 12 rupees from your 100 rupees will go to HDFC Bank. Reliance is 8% of Nifty. So another 8 rupees will go to Reliance. Maybe you can look at, maybe Sun Pharma. Sun Pharma only will get 1.8 rupees out of your investment. So different stocks will get different amounts of allocation because of the weightage of Nifty. Nifty in the last 12 months has done about 8.8%, and this is 12 months starting January of uh, January 2024. So 8.8% is the total returns from Nifty. Let's see how each component has contributed to this return. So let's say the first top 10 weights, the top 10 stocks, they account for 57% of the total weight. So top 10 stocks have 57% of the weight. They have averaged, those 10 stocks have averaged 20% this year versus 8.8% of Nifty. So they've done reasonably well, I would say. The 11th to 20th weights, the stock, the total weightage is 18.7%. They have averaged 12%, so much less than the top 10 weights, but still better than the average return of 8.8. The 21st to 30th stock have 10% total weightage, but they have done 25% on average return per stock, which is much higher than the 8.8% average of Nifty. 31st to 40th weights have total weight of only 8%. They have done 8.3%, slightly lower than Nifty. And the last smallest weights 41 to 50 have a total weightage of 5.4%. They have not done well at all, 1.2%, and they compare poorly to the Nifty returns. Now, if we look at the top 10 performers of Nifty in the last 12 months, what is the situation? These were the top weights, top 10 weight, 11 to 20th weight, 21 to 30th weight, so on and so forth. Then now the top 10 performers. These are the top 10 performers had only 14.8% of the total weightage of Nifty, yet the average return per share was 54.8% for each of those 10 stocks versus the Nifty of 8.8. So you can see, if there was a way to get into the top performers only, your money will work so much harder for you, versus the 8.8%. Or even if you were to go into the top 10 weights only, you would have got 20%. Even if you were to select 21 to 30th, you would have got 25%. But if you were to able to select the top performers, then you would have got 54.8% return. And isn't that amazing comparison? So if we see what were the top 10 performer list: Trent, 1 year return 135%, weightage only 1.3%. Mahindra Mahindra 81%, weightage only 2.7%. Bharat Electronics 59% return, weightage less than 1%. And many such stocks. Shriram Finance 42% return, weightage only 0.13%. BPCL 31% return, 0.53%. So all these stocks performed much above the average of Nifty, yet they were poorly represented in terms of the weights of Nifty. Now let's see what the heavy weights of Nifty have done. HDFC Bank 12% weightage has returned 4.9% this year. Why should I put my money in HDFC Bank and get 4.98% this year when I can, put 12% weightage in probably all these stocks and get an average of 50%? Another example, 8.2% weight of Nifty is Reliance. Reliance has returned 5.7%. Why should I be invested in Reliance this year? Let's take another example. Axis Bank, 3% weightage in Nifty, minus 2.36% this entire year. 3.89% on Nifty in ITC, 3.4% this year. So many stocks which are fantastic names have not performed at all. Why should I strategically be forced to be invested in those stocks which are not performing? That is the key. Two simple steps for better outcomes. Maybe you can choose a equal weightage Nifty product. If you want to invest in index, maybe that can do better. Or the other better way is that identify through a strategy and remain invested with the strength of the index and remove your laggards. It is very likely that you will come close to this top 10 performance if you continuously stay with the higher performance, higher returns stocks in the Nifty, and if you allocate your 100 rupees equally in the top 10 performing stocks, you will get a much better outcome of this weightage skew problem that is there in the index. Let us know in the comment section how you like this content, and how you are allowing your portfolio to not get uh, you know screwed in this skew business. Thank you so much for watching. Subscribe to the channel if you haven't. Please like and share this video, and thank you, and bye bye.